Hey, this is Jordan, and this video is being recorded on the early afternoon of Tuesday, March 2nd, 2021. And in this video, I'm going to talk about what is going on in gold and what gold is signaling, if anything. Thank you for tuning into this video. If you're watching this on YouTube, please subscribe. Thank you. So I only have one chart today, and we're looking at gold and current macro, at least from a macro market perspective. We have the real 5-year yield there, gold, the S&P 500, commodities, that's the CRB, bonds, that's TLT, and at the bottom we have gold versus silver. And so the deflation is out there. As soon as gold has a correction and gold stocks decline, they're shouting about this is deflation, this is the start of deflation, this is signaling deflation, and point blank, that's totally wrong, and I'll explain why. So let me start with gold in the real 5-year yield there at the top, and you can see the first line there in August 2018. So, and let's go back to the present and the last couple months. So we know that gold tends to be inversely correlated to real yields. So declining real yields, gold goes up. So what's happened is we've seen a little bit of a rebound in the last week or two in the real 5-year yield. When it stopped falling, that was in August, September. It rallied a tiny bit there. Gold corrected. And then gold rallied in December and into January when real yields went lower. But gold has not really kept up with real yields in the last couple of months, or even the last 4 or 5 months. And but now real yields, it looks like real yields have put in a bottom, and they could probably rebound more. And I think gold is leading that. And if we go back to August, which I started with, we could see that gold bottomed in August, but the real 5-year yield, that didn't peak until November. So markets are a discounting mechanism. They anticipate, they sometimes move ahead of time. And so I think gold's weakness recently is telegraphing that real yields are probably going to rebound. Then they're not going to go lower, at least over the coming months. So that's what's going on with gold. It's reflecting the fact that real yields are probably going to rebound, at least in the first half of this year. Now, I'll get back to gold, but looking at the other markets, look at what happened early 2020, the COVID crash. Now, that could have been a signal of deflation. Market crashing, commodities crashing, bonds surging, gold-silver ratio also surging. What has happened since then? And also, since last August when gold peaked, stocks are surging, commodities are really surging, and bonds have been declining. I mean, bonds have been a disaster. Yields have been rising, bonds have been getting killed, and the gold-silver ratio has been trending down. Okay, so there's no signal here of deflation. If there was a signal of deflation, you would see gold outperforming silver, you would see bonds moving higher and commodities getting hit. Okay, we see none of that. So there's no signal of deflation. And what we're seeing in gold and everything here is a reflection of the market thinks and believes there's going to be an economic recovery. The market also believes there's going to be some inflation. Gold anticipated a lot of that ahead of time. And normally that can be good for gold. Recovery, anticipating inflation. I mean, and it was to a certain extent. But remember, gold did really well alongside with bonds when there were negative yielding bonds and zero rates, that trade, economic pessimism, gold performed really well from that trade. So therefore, when the narrative changes to The economy's recovering. We're going to get some inflation. That money went into and bought gold for a different reason. So that reason isn't valid. Therefore, that money was selling gold. They're going into other things. So that explains what's going on now. Now, the real question is, well, we're going to get inflation. The market's telling us we're getting inflation. So why isn't gold moving higher? That should be good for gold. Yes, it should be good for gold. But the perception, the relative weakness in gold, and it's coming towards a bottom. I think it's going to happen this month. But the relative weakness in gold right now is reflecting, the market is telling us that inflation will at least be under control for this year. It's not going to get out of control. It's not going to accelerate this year. So gold, given the current context, gold needs inflation to not just move a little bit higher. It needs inflation to accelerate. That's when capital is going to move out of some other things and move back into gold. And I'm showing this tweet here. This is a great tweet by Chris Weston. And as he said, what's being indicated there's going to be no inflation overshoot. That's what the market's indicating right now. Number 2, no deflation. And number 3, the Fed are unlikely to cap long-term yield. So yield curve control, it'll happen at some point in the future, but the market is telling you over the next 6 months at least that inflation is not going to accelerate. There's not going to be yield curve control. So therefore, that's why gold is corrected. But the good news is it's probably going to bottom this month. But all of these things that I've discussed, it's an explanation of why gold has underperformed and corrected. So there's a lot of, there can be a lot of nuance to markets. And I hope this video was informative. Hope you liked it. Let me know in the comments there. Thank you for listening and watching this video. I really appreciate it. Check out all my free work at TheDailyGold.com. Thank you, and I look forward to doing another video for you guys in the days and weeks ahead.